Whilst the stock market was coming down, crypto decided to go exactly the other way, with Bitcoin coming up nearly 3%. We've seen the greatest gainer, Pepe and Rockerpool, Chainlink, The Graph and Ape. Quant has been doing well also. The greatest losers, there really aren't that many. In terms of liquidations, there's been about 140 million of liquidations, the shorts just outnumbering the long liquidations, just by a bit, but they're starting to equalize out. When the shorts and the longs start to equalize out, that can mean a change in market momentum. As price comes up, so too does the greed and optimism. Please always remember Rule 4, price moves in waves. This is the undoubted concept behind financial markets. You don't need to worry about price going up or down. You can ride price with BORSOG. Buy on red, sell on green. BORSOG is Rule 621, which is buy on red, sell on green. When you understand BORSOG, you can make money in any market conditions, as you're simply riding price waves with the knowledge of CTKS structure. In the main markets, we've seen a pull down in the S&P 500 futures, the Nasdaq futures, the Russell 2000 futures and the Dow futures. Since Hamas invaded Israel, we've had a spike in the VIX and that upward momentum is continuing. In the past trading session, the DXY gained a lot of strength. That's a US dollar currency index. As the DXY gains strength, the fiber gains weakness. The Aussie, the Kiwi and the cable also become weaker. The increase in fear and the increase in the DXY led to a broad-based sell-off in the Nasdaq and across the markets. Except, of course, for Bitcoin, which has been acting as a flight to safety. We've also seen yields come up and bond prices come down. Gold has been doing relatively well. Oil staged a rebound. The CTKS community doesn't believe in bull markets or bear markets. It believes in a BORSOG market, which is buy on red, sell on green. And the crypto market has been doing incredibly well. Bitcoin has undoubtedly been leading the pack, but there's a lot of strength inside Solana as well. Monthly service members, please keep your eye on Solana. And CTKS graduates, please make sure that you mark up Solana if you're actually in the crypto market and not part of the service. We know no alt can escape Bitcoin's gravity, and that's that blue line, Bitcoin's gravity. We can see Ethereum has come up with Bitcoin, but is a little bit weaker now. Binance Coin is a lot weaker. XRP was trying to regain that particular momentum with Bitcoin, but so far has failed. Solana has been doing incredibly well. ADA put in a very nice spike. Tron again is starting to shine in the darkness. This means that we need to prepare ourselves for a possible retracement. But Bitcoin at the current time looks very powerful. We need to actually examine the structural levels on Bitcoin to understand where it could go. We're witnessing a broad-based flight to safety across the main markets, and that's pole vaulting Bitcoin upwards, as well as a lot of positive Bitcoin and crypto news. The next FOMC meeting on the 1st of November doesn't carry any probabilities of a rate hike. 97.1% probability of no change and a 2.9% probability of an easing. That is a reduction in the federal funds rate of 25 basis points. If you're liking the content so far, please smash that like button and don't forget to subscribe. We need to keep our eye on the CTKS structure, that is, the total market structure of the Tier 1 charts. These charts are the engine of financial markets globally. We stack probabilities and cross-triangulate how price is interacting through the Tier 2 and Tier 3 charts as well. Always understanding that you control the trade or investment, but the market controls the return. So you must be prepared for a down case, a neutral case, or an up case. Price is always moving in a wave. The key inside financial markets, don't guess, know where the CTKS structure is, and you'll get that X-ray vision. All investors become traders anytime they buy or sell. Therefore, investors must know where the structural support and structural resistance levels are inside the markets. They need to be able to read the charts to understand what things actually mean. For example, when we see the US 10-year yield spiking down, it's not going down to zero because it's going down to levels of structure. When we see the US 10-year yield spiking up, we also see that we currently got a fresh air gap. This is a bit of a problem because when you get a fresh air gap, prices can move up, in this case a percent, can move up very, very quickly. Where did these particular colored bands come from? They came from the CTKS method analyzing over 40,000 days worth of data on the US 10-year yield. These are not normal support or resistance bands. They're standards-based bands. The CTKS method is the world's most powerful standards-based buy and support level system for smart money. And when you pop on the monthly indicator, you can see all of these specific lines. Just think back to when the US 10-year yield was collapsing down. It collapses down to these SL areas, which are called Stanfield levels. That's to distinguish them from normal support and resistance levels. Then it came into an area of substantial smart money support. You'll notice it wavered around there. Finally, just broke through it to another level of strong structural support. Came back, tried to retest, positive air. Managed to get through all of this, and the yields are currently spiking. That's what's bringing down the stock market. What does this mean to us? When you understand the implication of the charts, it's very, very onerous. We have a fresh air gap right up here. And if we see the US 10-year yield continue to gain momentum, we expect the US 10-year will move into this 5.0446 to 5.8% range. That could be fairly problematic for the stock market. Even though we've seen a decreasing probability of the Fed raising interest rates, the market is still very concerned. Don't forget that these bands have been drawn up, accounting for over 40,000 days of price data. When looking at US oil and its nearly 60,000 days worth of data, we would not just simply draw one line from here to here and say, oh, this explains everything inside US oil. We need to know where the CTKS structure is. We could turn on the indicator, but I'm going to show you just colored bands to give you an indication. Understanding CTKS structure is something that you will need a little bit of education on. That's why inside the service, I release 27 videos that explain the structure of the Tier 1, Tier 2, and Tier 3 charts, as well as price projection paths for the up case, the down case, and the consolidation case for the month. What we can see here, US oil came into a very solid level of structural support. That structural support between 81.81 and 84.10 rebounded the price of oil. That's why oil has been staging a rebound. A lot of people try to guess where oil is going. Instead, look at the CTKS structure and you will get a very good probability. And it's all probabilities inside financial markets. Everybody wants a bumper return, a bumper percent, but they don't want any risk. Financial markets don't work that way. Your return is due to your risk. One thing to note, if you're trading oil, please keep your eye on this 85.76 to the 85.97 area. That's where we encounter some structural resistance, but it's this top area that you really need to keep your eye on, 87.54 to 88.24. One thing that you will see, all people treat support and resistance levels as equal weight. They are not. I'm going to zoom in here on this middle band and show you something that you would only see if you understood and knew the CTKS method, or if you were a monthly service member. I've just zoomed in on this middle area. As you look at it, it may just look like it's not really much, but structurally, over nearly 60,000 days worth of data, it is quite strong. It's not an equally weighted structural resistance area. It's an important one. The CTKS method is the world's most powerful smart money buy and sell level detection system because it actually shows you the power of different support and resistance levels. It is very little wonder that oil is starting to reject this particular area because it is so strong. If you want to know what smart money knows, just get the indicator, or better yet, learn the CTKS method for yourself through the standard certification process. Flight to safety plays are very important at the current time. We've seen a flight to safety into gold and silver, and also Bitcoin and crypto. When we look at silver's price, and it's been trading for over 80,000 days, nearly 81,000 days. That's a lot of time. When we look at the monthly service indicator, this will just draw up the CTKS Method Standards Certification process for you, and you can see this level of smart money sell resistance has been quite strong for silver. That's at 22,981. We can see also a level of support in silver's price structure at 22.88. You can see lower levels as well. A lot of people, when they get into financial markets, they'll just draw one line. One line is okay if you know the CTKS structure, but if you don't want to miss out on all these tens of thousands of days worth of data. Smart money takes them into consideration. Retail ignores them. Retail creates a story based around the recent price action. Smart money looks at all of price action and doesn't do any stories. It abides by price reality. It's a completely different way of thinking. We have a rule that CTKS Structure overrides when we look at gold, which has got nearly 70,000 days of data associated with it. We wouldn't just draw support and resistance lines for the past couple of days. Even the past year or so wouldn't be enough. That would just be a fraction of a percentage point of the data. You can't make a decision if you don't have most of the data. So let's turn on the CTKS indicator. What we can see right here is gold has structural resistance at that 1986.02 level, and it's got another one in there. When you get a confluence of smart money levels of SLs, they push price down if they're above price. If you have a fresh air gap, it means the price can move down very, very quickly because there's no support in the market to stop it moving down. Of course, it works the other way as well. At 1973, we can see a structural support level, but it's not as strong as the structural resistance level. When you have a fresh air gap to the upside, price can move from SL to SL very, very quickly. But unfortunately, the same fresh air gap can move price down just as fast. That's why we buy on red and sell on green. We're always looking for deep value as our entry points. If you're an investor or a trader, knowing where these structural buy and sell levels are is a license to print money. The Nasdaq has been around for 18,500 days, and when we look at price action, we need to take into consideration all of this time, and that's what the standards-based CTKS method actually does. A couple of days ago, I was saying keep your eye on that 12,790 level. There's a fresh air gap inside the Nasdaq. Price could move down very, very quickly, very suddenly, and catch a lot of people off guard. And unfortunately, the Nasdaq decided to fill that fresh air gap. If you've seen price spike upwards and downwards, there's probably a fresh air gap underneath it, structurally speaking. If you're trading Tesla, which has nearly 5,000 days worth of data, make sure that you know that there's a fresh air gap underneath Tesla's current price down to 197. That means the price could come down really, really quickly and catch a lot of people off guard. The Tier 1 chart, the S&P 500, is vital to understand when it comes to the Tier 1s and the stock market. The CTKS method, with almost 56,000 days worth of data, identified strong structural support between 4161 and 4192. The S&P 500 is coming down to that area now. The last time it hit this structural support area, it bounced like a Super Bowl, but it couldn't get above the smart money resistance of 42.75 to 42.92. You'll note recently with the DXY came down into very strong structural support, dipped a little bit under and then rebounded. We could see something similar in the S&P 500. We could see the S&P 500 continue to come down, consolidate within this red area, and then stage a rebound after some days. Or it could hit it and actually rebound like it did previously. The major issue is follow price reality and know where the structure is. This is your safety net inside price action. By looking through a variety of charts, you end up stacking probabilities, and when we look at junk bonds through a structural lens, we know that there's a lot of structural support underneath junk bonds at the current time. That means that the S&P 500 could well bounce sooner rather than later. This would be very different if junk bonds had little to no downward structural support. That would be a completely different outcome. That's why junk bonds are very important to look at. Most people don't look at them ever. The beautiful thing about the CTKS method, how you analyze one price action chart, is how you analyze all of them. That is, if you get over an area of very strong structural resistance, it turns into support. And when it supports price, price is always moving SL to SL, Stanfield level to Stanfield level. When you get a mass accumulation of SLs in a particular area, it forms very, very strong structural resistance. This structural resistance occurs over 5,000 days worth of data. This is not just normal resistance levels that retail influencers tend to draw. Nearly 20 years ago, I wrote the book Intangible Finance Standards: Advances in Fundamental Analysis and Technical Analysis. As a statistician and finance degree qualified, one of the things that I saw inside the markets, the stock market especially, wasn't accounting for intangible or exponential value. This led me to the creation of new branches of mathematics inside finance. The CTKS method is the advancement of over 270 years of candlestick pattern analysis. It reduces it to a very simple concept. When you get a lot of lines above price, that's bad. When you get a lot of lines below price, that's good. I know a lot about fundamental analysis, and of course, as a core developer of technical analysis, I know a lot about that as well. The one thing that I would suggest from nearly 40 years of experience inside financial markets, know where the CTKS structure is, because it's vitally important to know. Many people were going nuts about Bitcoin, and I was just warning people a long time before this actually occurred. I was saying be aware of this structural resistance between 35,183 and 36,025. And we can see we just basically pinged the bottom of that range. We're trying to grind up and through it, but a lot of people will think we're over resistance right now. This is recent indicative price, or RIP analysis. RIP does RIP your money. If you're not looking at all of price history, if you're just looking at a little bit of a sample of price history, what you've got is exactly that, a sample. You've got a story. You don't want stories, you want structure. The real resistance level is from 35,183 to 36,025. A lot of people will say, oh no, when it gets over this 34,766, it's going to the moon. No, it's going into this structural resistance, and this is going to be hard for it to get through, and I did mention that last week. You'll know where the exact structure is by the monthly indicator. You just add it to your chart and pop it on. Bitcoin is looking really strong, and we may break through this structural resistance. I certainly hope so. Over time, we definitely will. Bitcoin and crypto has an incredibly bright future. A lot of people are starting to find out about it. We've been here for years and years and years. Each and every month, I put 27 videos out, one video explaining each of the Tier 1, the Tier 2, and the Tier 3 charts, commenting about their structural levels for the month. You can see it's critically important to understand where the real structure is inside the charts. That's what investors and traders are dealing with. If you're an investor and didn't know where the fresh air gaps were, especially the negative fresh air gaps, you can be caught off guard and actually sell when you should be buying. I would urge you, if you haven't done so already, to get Level 1 and Level 2 CTKS Method Standards Certification. That's how you can learn the CTKS method and just apply it for yourself. Alternately, if you want to learn how all the financial markets work as one, and they do work as one living, breathing organism, going across to the CTKS Masterclass is a very good idea. You can find more details on that at cryptotechnicalanalysis.org. Remember, normal TA cannot be applied to crypto. It will give wildly misleading signals. As a community, we believe in buying on red, selling on green, or BORSOG. We know that no matter what price does, it's always moving in a wave. It's always coming up, then going down, coming up, then going down. This is the nature of price. With the knowledge of the masterclass, you can take full advantage of these price movements. The reason that I put Solana here, I want to give you a special bonus. Because you've watched to the end, the concept Solana has been going for over 1100 days and is encountering less and less structural resistance overhead. In fact, it's becoming very much a fresh air gap to the upside. As always, you must know what you're doing. You must have your three-dimensional risk management. But personally, I'm leaning into Solana. It looks really interesting. The only thing that I could say about Solana, the force is strong with this one. For the monthly service members, please make sure that you add the indicator to your Solana chart and then pop it on. You're going to see something utterly incredible. The indicators that I use on these daily videos are available through the CTKS Method service, and you get a very special Halloween discount, so pop across to ctksmethod.org. That's the full link, and you'll find the link in the description of this video. For the price of a cappuccino, for example, every couple of days, it's a really valuable service. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.